Any fool can buy high and sell low. The wise man knows it's all in the timing. My friends, we look for timing every day. That is what charting is all about. Technical analysis allows you to know the right time to purchase your practice trades and the right time to sell them. That is what we are learning. And we have a great training for you today. Fundamental analysis is fine, but don't be a dumb buyer. And what we mean by that is that it's all about the timing. Yes, knowing what something is worth, that is a good company with a good stock, very, very valuable. Knowing that something has intrinsic value. The issue with the market, though, is just like the tide coming into a harbor, it floats all the boats, whether they're a crappy boat or whether they're a good boat. It's making sure you know when the tide's flowing in your direction and away from you. Because when the tide goes out, those beautiful boats can go down into the mud also. So keep that in mind. That is what we focus on so much here. 10 to 15 minutes a day is all we ask. If you don't have our book, you need it. And there's an autographed copy waiting for you, Charting Your Way to Wealth. Let's jump into these charts. The S&P and the Nasdaq 100 both down for the day. We see gold and bonds up. What do we see happening so far? Well, still it looks like it's going to maybe end the week crossing over, going up. The S&P was shooting through at the beginning of the week, and as I told you, pay attention. It could pull back through before the week ends. It just depends. Down for the day, 0.63%. Big green up candle. But again, that price percent oscillator is our main indicator, the most important thing we do. And I'm going to put at the end of today's training, the PPO is going to be there on the screen for you. So look at the video at the end of today's training on the price percent oscillator. Now, that first training I talked about fundamental analysis and not being a dumb buyer. That is available to the folks that are signed up for our emails, and that is every day we send out to you the trainings that we do along with the market review, and you get that for free. Just go to chartingwealth.com, sign up. That list is never sold, never spammed. Now, we see a green up candle forming for the week. Derivative oscillator still negative. Price percent oscillator trying to cross over. We don't call that candle until it happens. The 2-day chart finished drawing today, did it not? The prior one was on Monday, Tuesday, Wednesday, and of course, as we look at it, we can see did not hit a higher high. It did not. As far as the wick on top, the prior candle representing Friday and Monday. So we see things are still trying to move up. Price percent oscillator, you can see where it lost some of its energy, the higher angle that it was going up. Derivative oscillator still gaining upward momentum. Remember that derivative oscillator is a triple smooth version of the relative strength index. It's a leading indicator as opposed to the price percent oscillator being a lagging indicator, but the price percent oscillator is the more accurate of the two. What we see is price increasing, the percentage increase one period over another. We see that reflected in the derivative oscillator as opposed to the moving average convergence divergence in the price percent oscillator. And you know, I'm not just going to put the price percent oscillator training at the end of today's video. I'm going to put the derivative oscillator training too. Both of those are going to be there for you so you can understand those better. They're explained very well in the book. It's again why I recommend you want to supercharge your training. You need to read the book. So we see the derivative oscillator increasing momentum, price percent oscillator losing it on the 2-day chart. Go to the half-day chart. That's 195 minutes. That's a half day on the market. It opens at 9:30, closes at 4 in the States. Look at this. We have 3 down candles. They're getting bigger as they head down. Haven't crossed over going down yet. Price percent oscillator heading down, derivative oscillator heading down, but they're both still positive. And again, that's just our smallest candle. So we'll keep an eye on things. Now remember, the weekly is still in a confirmed down move, 2 days in a confirmed up move. We don't call the candle till we see what happens at the end of the week. Now, watch where the price percent oscillator is on the S&P as we switch over to the same size chart, that is the weekly on the Qs. See, it's not as close to crossing over going up. Have reached a higher high this week than the prior week. Go into the third week of up movement. Nice big up candle. Derivative oscillator, however, still negative. Price percent oscillator negative. Unless things are big on Thursday and or Friday, probably not going to have a crossover on the Qs. So we'll keep watching. We look at the 2-day. Now remember, weekly still in a confirmed down move. 2-day crossed over going up back on Monday. And again, that takes us out of any kind of downplay at this point. One of two things will happen on both the S&P 500 and the Qs. Either the weekly will cross over, we'll have a weekly vertical crossover at the end of this week or next week, depending on just how the markets move, or markets will start losing energy and the 2-day will cross back over going down. It's what we call a recross. We're waiting for one of those two things to happen. Price percent oscillator still heading up, lost some energy. Derivative oscillator gaining momentum. Go to the half-day chart. We can see the price percent oscillator heading down in the morning. And again, not hitting the lows it hit in the morning in the afternoon, but again, continuing to move over. Things are still positive on both the price percent oscillator and the derivative oscillator on that half-day chart. That's where we are in stocks, both down. The Nasdaq 100.84 for the day, the S&P 500.63. Now we see 20-year bonds up 0.23 for the day. What does it look like this week? Well, we see the price percent oscillator still moving down, not super strong, but moving down. Derivative oscillators negative, losing downward momentum. We have a green green solid candle. That means a slowdown in the down movement. Trying to figure out what we would call this. It's not a doji. Again, we've got a solid green box with a little wick on top, a longer wick on the bottom. Of course, it's a spinning top. And again, just sort of indecision, tending down. And again, that price percent oscillator still going down some. So that's where we are on the weekly. What about the 2-day? Now the 2-day, and this is interesting, should have drawn that 2-day as crossing over going down all the way back on the 20th. That is odd. Anyway, we will fix that right now. Perhaps that got changed over as we were doing some work on the charts earlier. Make sure that's happening. So the 2-day, of course, is still negative. And again, moving up as far as the price percent oscillator goes, still negative. Derivative oscillator still negative. We have a green up candle for the week. And again, we'll continue to watch and see what's going to happen there. What about the half-day chart? Again, continuing to move up in the morning, losing some energy in the afternoon for the day, up 0.23%. We'll continue to watch. Now again, if this half-day chart rolls over in the same direction as the weekly and the 2-day, you can try that as a practice trade, see how that works for you heading down. Not our favorite thing to do. We prefer weekly vertical crossovers, number 1, 2-day recrosses, number 2, and lastly, these half-day recrosses going in the same direction as the 2-day and the weekly. You don't have to do any of those except the weekly vertical crossover. Why? Because our experimentation going back in time, backtracking as we call it, shows us over and over that those weekly vertical crossovers on charts that are chartable, that is stocks and ETFs that you can chart. And how do you know if you can chart them? You have accurate weekly vertical crossovers. When those things occur, the stock or ETF moves in that direction for a discernible period of time. At least 2%. Gain or loss either way, because remember, we do something called inverse funds or puts. And if you don't have our options training, it's available for our Patreon members. Go there at any level, join us. We'll get that training right to you. It's 3 parts, options made simple, the charting wealth way. Now, what do we see going on in gold? Remember about the time everybody was talking about gold is going to go to 15,000 an ounce? It rolled over on our weekly chart and went down, actually hammered down that following week. It's really been going, well, a week and a half later. It We had sort of an up week following that initial crossover, and then things really slammed down in gold quite nicely. Since then, it's been moving sideways. This week we have almost a doji, indecision tending down, price percent oscillator stooping, really sort of moving over a little bit more rapidly, going down. Derivative oscillator about flat. Now again, up for the day 0.31%. But overall, indecision for the week. Look at that 2-day chart. Price percent oscillator is about flat. We have a red spinning top, indecision tending down. Derivative oscillator still negative, but losing downward momentum. Half-day chart, what do we see there? Just pushing through, heading down at the end of the day on the derivative oscillator. So continue to keep your eye on gold. We have the weekly in a confirmed down move, the 2-day in a confirmed down move, and that half-day chart at the end of the day rotated over going down. So let's just continue to watch gold, see where it's going to go. It's really been sliding sideways since we had that big drop on the second week after the weekly vertical crossover. That was the week ending the 25th of September. That's where we are, folks. You're wondering what is going on. Why is it weird right now? Well, we're going into an election very, very soon. The markets are just trying to figure out what they are going to do and what is going to happen here in America. They will sort themselves out and give us clear direction. In the meantime, we continue to follow these charts, 10 to 15 minutes a day, learning the nuances, practice trading when those trades are available, 10 to 15 minutes every day. If you only tune in when we have big moves on the charts, you're not going to catch the little stuff, and it's all about the little stuff. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.